Have you ever thought about how challenging it can be if the business climate changes? Well, on today's show, Mitch Ginsburg is going to share his story with us. Mitch owned a mortgage company that went kind of belly up during the 2008 downturn. It actually caused him to re-ideate and rechange his business and ended up launching a whole new product that he's going to share that he's had for the last 8 years that is changing the commercial lending loan cycle. So stay tuned for the show, and we'll see you here in a minute.
All in you. Everything you're looking for, it's all in you. You gotta believe that it's all in you. Everything you're searching for, it's all in.
Hey, everybody, it's Jeff here once again with the Freedom Nation podcast. And today's going to be a fun show. I've got Mitch Ginsburg on, and he is he basically owns a software company that matches up commercial loans with borrowers and finds the best deal. And he's got a wonderful story to tell about that and how he got to that point. So, Mitch, welcome to the show, my friend.
Thank you. Appreciate it, Jeff. Thanks for
I'm
having me.
so glad to have you on here. Really interested in your story. So why don't we get kicking off with that? It's obvious you came from South Texas, and
Yeah, deep South, very South Texas.
so
Yeah, as you can hear, from South Africa, born and raised, educated there, and arrived in the United States back in the mid 80s. Back in South Africa, I was with Arthur Young and Company, a big international CPA firm. Joined Leventhal and Horwath when I arrived. Practiced for about a year and figured out pretty quickly I wasn't cut out to be a CPA. So got nothing against CPAs, just wasn't for me. And then got into residential lending, built up a residential mortgage bank over 25 years. And then aid rolled around. We were in probably three of the four worst hit states. We were in Arizona, California, Nevada, and then we were in Texas and a few other states. But those three were just devastating. Property values dropped, in some cases 60%.
Mhm.
We banked the loans. Obviously, we sold the loans off to the secondary markets, to Fannie and Freddie. But the results were devastating. The buyback requests were just overwhelming at some point. Kept the company going far longer than I should have, and got out of that in probably around 2012 and saw enormous opportunity in commercial real estate lending, which is very diverse. There's so many different kinds of lenders. There's so many different kinds of properties. And how does anybody know where to go? Because every lender underwrites according to their own guidelines. There's nothing really standardized. So I was struck by that there wasn't really a search engine or a marketplace for people as you would have in everything else. You want to book an airline, go online, and you got every airline in the world and every hotel in the world or whatever, and you can book it. Commercial real estate, it's this black box for commercial real estate lending. So we've taken the mystery out of it. We built a database. We've got probably 750 plus lenders on, which represents about 168,000 loan products.
Wow.
And our technology, we have search engine, which real live pricing will match the borrower with the perfect lender. So you're aware of the golden rule, right? He who has the gold makes the rules.
Of course.
And we've actually got like a poster of the golden rule framed upside down in our office, because up till now, the lenders had the gold and they've made the rules, but we really want to empower the consumer. So let the consumer select the lender they want that's got the terms that they want, opposed to the lender saying, right, these are my terms and let's see how I can fit you into my terms. It's been a great ride. We've been at it for about 8 years now, funded several hundred loans, and we're scaling. And actually, this is a phenomenal time for us because people are shopping online, really, because with interest rates rising, a lot of uncertainty in the economy, is just a great opportunity for us. So feel very blessed.
What an amazing story. Well, I think the big thing in the room, we've seen some bank failures and things like that. What's your take from your perspective? Because you're trying to match up lenders. What's your take on the kind of commercial world going forward here?
Clearly, things have changed. A lot of lenders are tightening up what we call their credit box. Their guidelines are tightening up, maybe requiring a little more money down, better liquidity, sometimes putting up a cash deposit. But the sky's not falling in. I love the media. They'll grab onto one statistic or one bad bit of news out there, and it's, oh my God, everything's. But I guess that's how they sell ratings. I think also the exposure amongst the community banks has been overblown. I think some of those statistics that are thrown out there are far bigger. If I remember correctly, I'm just going by memory now. I think the overall exposure is something like 13% of commercial real estate debts held by community banks and smaller banks. Bearing in mind, you got your giants, your big 4 or 5 that hold a huge amount as well. But then you got CMBS and Fannie Freddie. So there's clearly some exposure. We've obviously had the 3 fail. There could be a few more that are a little shaky. But I think a lot of it is perception. If everybody
Yeah.
thinks the sky's falling in, everybody pulls back, and then the sky will fall in. So I think there's certainly for us, this is a huge opportunity with rising interest rates, and we're busier than ever. And I think everybody's got to find the opportunity within every market.
Mm-hmm.
People in turbulent markets, that's when people make the most money. And those are the smart people that are looking for an opportunity and saying, where can I make money out of this potential opportunity, out of this potential situation, opposed to, oh my God, the sky's falling in and let's all go get a bunker and hunker down type of thing.
Yeah, it's funny because I do another show and we talk about this. It was I feel the same way you do. They'll hook onto one statistic and then, oh, every bank is going to fail, and oh, there's this massive bubble in the commercial space. The market will adjust to
Yeah,
whatever's out
it
there.
does. And there's certain segments. Office buildings are probably one of the harder hit segments at the moment. But there's so many factors that come into play. Number one, you had COVID, you had people really getting used to working at home, and companies are
Yeah.
finding it challenging getting people back into offices. And the hardest hits are these high rise towers,
Mhm.
downtown big cities, LA, New York, San Francisco. And then there's other demographic issues which are affecting it as far as safety in certain cities, et cetera. And then obviously rising interest rates doesn't help because a lot of commercial loans are short term.
Mm.
You don't have 30-year fixed rates, they're 5 years, 10-year. So a lot of these are coming up for renewal. And with rising interest rates, you generally have to generate more rental income in order to support the
Sure.
higher payment, which a lot of these owners of these larger buildings don't have. So I think in certain segments, you are going to see more defaults, particularly in that region. And they're going to make headlines because they're going to be big numbers.
Yeah.
But if you got a $500 million office tower in the middle of Manhattan that fails, it's going to hit the radar screen. And all of a sudden, it's like, but it's going to happen. But you know what? I think the underpinnings of the economy are still decent. It's nowhere near where we were in '08.
Oh no.
So I think if I can share any advice, keep looking for the opportunity and create your own reality, I think, to some extent.
Yeah, absolutely. So let's kind of zone back to 2008. You went through a pretty turbulent time, and really for the next 4 years, you hung in there where other people didn't. What advice can you have to other business owners that might find themselves in a similar situation to that?
What I think is important, and to some extent, I held in longer than I should have probably read the tea leaves sooner. It was bigger than I thought it would be. And
Mm,
my personality is I don't like to quit. I hang on like a bulldog, and at times you do have to learn to quit. So I think clearly what's important is just to believe in yourself,
mhm.
believe in what you're doing, and just focus and execute. But once again, don't make the mistake that I made of, I think at some point reality sets in, and if clearly it's a lost cause and what's going on is way beyond your control and just a lot bigger than you can manage, it's okay to throw in the towel. You live to fight another day. And I'm living proof of that. It was a devastating time for me. I was on top of the world, big company, thought I was bulletproof. And then these global economic factors came around, which
Yeah.
literally it was a tsunami that nobody could withstand. And so it happens, and you realize it, and it is what it is, and you stop feeling sorry for yourself and you dust yourself off and just say, right, where's the next opportunity? And with hindsight, you know what, Jeff, I think it probably was the best thing that ever happened to me for two
Mhm.
reasons. Number one, I think it changed me as a person. It
Okay.
taught me that all the things weren't important, the fancy cars and big houses. And yeah, it's great, but that shouldn't define you. And secondly, it's given me this opportunity, which I feel is a lot bigger opportunity and certainly more fulfilling and rewarding. I'm having so much fun coming to work. And that's the important part. Enjoy what you're doing, have fun at what you're doing, and then the money will come. Once again, provided you're in a real industry and it
Yeah.
does have opportunity, that's important. And just because every day is a gift. And it made me realize, certainly from a financial and economic point of view, and generally in life, from your health, don't take anything for granted. Every day is a gift. And if, thank God, I've got health and you're in a position where you're building economic security, just be grateful and enjoy the ride. I think that's really the key.
That is awesome. That's such a great advice. And I think
Yeah.
just wait every day you wake up above ground is a good day. It's my,
That's a
my
good day. And lots of things are going to happen beyond your control, but how you react to them
Mhm.
is in your control. So
Yeah.
ultimately, you do have control over everything because you control your reaction, and it either could be negative or, you know what it is, what's the best I can make out of this situation? And you move on. And I'm a firm believer that if worrying and panicking and did any good, I would worry and panic, but it doesn't. If anything, it debilitates you. You can't think clearly. You can't make the right decisions. I think you just got to strap yourself in and go for the ride. I think that's the key.
Absolutely. So when you kind of made that pivot in your life in 2012 and started to kind of refocus, was this the software that you guys developed and your algorithms and everything else? Was it something that you were able to take a software that existed before, or did you have to start from absolute ground zero with?
Started with a blank piece of paper. It was really a fun process. So, having been in residential lending for all those years, I understood lending.
Okay.
And I understood the fundamentals of lending, and obviously, just the rules are slightly different in commercial, but lending is lending. So it was really fun. So I lived the life of the proverbial startup. I was probably a little older than the majority of the Silicon Valley startup guys, but I'd arrive at a little executive suite every morning in my sandals and shorts and t-shirt, and I'd design during the day. And I've got a phenomenal development team. We still have an office in India. I've got a great team in India, which we've had for 8 years now. And then they would develop at night, and that went on for probably almost about a year
Hmm.
until we had the ComLoan 101. Oh, actually, our platform's called Cupid,
Hmm.
and Cupid stands for Commercial Underwriting Pricing Index Data. And obviously, playing on the whole matchmaker thing, that we're the Cupid of commercial real estate
Brilliant.
lending. But it was just a great, fun process. And now, 8 years later, obviously, the platform is substantially different and has evolved tremendously since we first launched. And to watch it grow, it sounds corny, and everybody uses the term, you're watching your baby
Yeah.
grow and grow up. And I guess it's now a teenager. Hopefully it doesn't behave like a teenager, but it's just a great thing to think, oh my God, this literally started from just an idea.
Mhm.
I was driving one day and I thought, my God, how does anybody know? Because I was involved in this commercial deal, and I was like, where do I go? How do I know what bank does what? And I said, there's got to be a search engine. And that was
Nope.
I guess, the inspiration. And 8 years later, Comloan is alive and well and thriving and growing,
And
which
it's
is
absolutely
awesome.
brilliant. Some of the greatest ideas come from that very thing. How there's got to be something for this. Why has
Well,
nobody
well,
thought of this?
you know what? I was once asked, I was at a venture conference, I was doing a presentation. What is the key to a good startup, and what are the key variables that you need to ensure you have in order to keep going? And the first is, you got to be solving a problem. It's
Mhm.
pointless creating something that's not solving a problem. So clearly, we were solving a problem. The second thing, you got to be in a market that's scalable, that's big enough. If you got
Mhm.
such a tiny market, yeah, you could be solving a problem for a handful of people, but what's the point? You're not going to really make money out of that. And then, and so you got to be solving a problem in a sizable industry, and it's got to be a real market, big,
Mhm.
sizable, real market. And if you meet those criteria, then you just got to keep going, because you're going to get knocked down, you're going to get beaten up, and you get all the naysayers, particularly if you're doing something that's never been done before.
Yeah.
I cannot tell you how many times I heard it can't be done. It's too
Mhm.
complicated. It's too diverse. But that's the whole point of a marketplace, of a search engine. When you have a complicated, diverse industry, you got to organize the data in a concise, systematic manner that'll enable people to make a correct choice. And look what Amazon's done. There's certainly, that's a complicated market that they're in, all these different products. And it's just so consumer centric. And I'll never forget a podcast that Jeff Bezos did back, oh my God, I was in the 90s. And he said the internet's great and technology is great, but the key is to focus on the customer experience. And that's the key to success. Use technology to enhance that customer experience. That's really the key.
Yeah. Well, and for you, and you're absolutely true on this, it is such a complex market, knowing where to go and what the lending standards are. And God willing, you found that source. Is that is the data that's out there that you guys compile, is that commercially available, or is it something that you have to gather from each individual lender, or is there any other source of it?
There really is no other source. We've
Right.
literally gathered that data lender by lender.
Wow.
We've got our onboarding process down to a science where we can onboard a pretty complex lender with a lot of different products within 30 minutes.
Good Lord.
And then all the data is kept current either by the lender, or if the lender hasn't gone to update their lending variables in 90 days, we reach out to them and ensure that it's all accurate. But the interest rates are kept current daily. And how we
Okay.
do that is a lot of lenders link their rates to an index,
Okay.
whether it's the treasury or whatever that index is. And then every lender has a margin that they would add to that index, which is their lending rate.
Mhm.
So they tell us what their margin is, and then our system pings the indices on a daily basis, and we'll just update their rate. There's certain other rates like CMBS or Fannie Freddie, which are really functions of how the bond markets perform. And
Mhm.
we've written algorithms which sort of mirror how those respective entities would price their loans. So the rates are current. So if you ran a quote through our system, generally within eighth to a quarter of a percent max, you're going to get current pricing on where the market's at on that particular product, which is really amazing.
Mhm. So the range of product that you have available or can source, how large of a deal will your software kind of handle in that?
There's no real limit. It's
Okay.
whatever our lenders on the system. Generally, our sweet spot is a million to probably 50 million.
Okay.
I think when you start getting into, and we just got a $70 million loan in, I think I heard one of the guys tell me today. So I'm probably, but really, generally, once you get to the real big loans, they become very structured. The capital stack's very structured. There's different forms of mezz financing, and a lot of those deals are sort of negotiated around a conference room table. We're very
Mhm.
transactional.
Yep.
So you got your debt component, you got your equity component. And so generally your smaller transactions up to 30, 50 million is really where our sweet spot is. We are starting to work on loans below $1 million. We've got a beta going, which we call our small balance loans. That's a very underserved market because nobody
Mhm.
wants to touch those. Because generally, unless you're using technology, you can't make money
Okay.
because of the loan size. And believe it or not, generally they're tougher to do. You
Mm.
got borrowers that are generally first time. They're not as well organized from a documentation point of view as very seasoned real estate investor who's buying a $20 million property and owns another five $20 million properties. So they've been to that movie before. But it's a great market. It's underserved, and we're looking to be able to service that market as well.
I love that. Well, once again, when you can find those underserved markets like that and come up with a good solution that's cost effective for those banks to do the business, it's that's a huge benefit to the world. So thank you for doing that.
Right.
Let's transition to the fast five questions now. So, first question: you wake up in the morning, business is gone, you have $500 in your pocket, laptop, computer, place to live. What are you going to do first?
Well, I'll probably get used to eating ramens for a while.
Buy a lot of
but
ramen for $500.
I think pretty much just what I said. I would sit and say, where do I believe there's a problem to be solved? Where is there a gap there where the consumer is being underserved by virtue of there not being an efficient model or solution for them in whatever that particular situation is. So to determine that, secondly, I would make sure that it was something in a large enough environment that's scalable.
Hmm.
And then I'd say, all right, let's start planning. And obviously, with $500, I'd have to run out and raise some capital to put it all together. But I think that's really what I would do, because being busy and just creating activity for the sake of it, creating activity doesn't make sense. Whatever you do, you got so many hours in a day and you got to make sure it counts. And if you want to build economic freedom, you got to be putting your energies into a direction that ultimately will give you economic freedom. So that's why I wouldn't go and look for a job. I'd say, all right, where's my next opportunity? And let's figure out and do this.
The old Grant Cardone. I want to know. I come to town. I want to know who's got my money.
Exactly. Exactly.
What's the biggest
Exactly.
business mistake that you've ever made?
I think the biggest business mistake I made was not throwing in the towel when Countrywide and all the other big guys did virtually immediately. Yeah, I guess I underestimated the size of the collapse and overestimated my abilities, maybe. Yeah, that was a huge mistake. I shouldn't have kept going as long as I did.
You learned, and I think you
I
came out
learned.
better. And yeah, I think you came out better in the end because you de-risked yourself massively.
Absolutely.
Yeah, you can
Absolutely.
still
Ab-
participate in the world. You just don't participate with all the risk attached to it. So,
Exactly. I learned a lot.
absolutely. What is a good book that you would recommend for our audience?
Probably one of the best books that I've ever read, which is a classic, is Jim Collins' Good to Great. I
Yep.
think that a lot of those fundamental principles all these years later still apply. I just think it's a great read. Just sort of looked at what defines us, what are those core components that are common to every really good company opposed to mediocre companies.
I love that book. Yeah, you hit it right on the nail head. What's a tool that you
Yeah.
use in your business every day that you might recommend to others?
Well, what I think is critical is communication and building a culture in a business that there's no secrets, and empowering your team. So what we do is we do daily huddles. It's like almost like it's a quick Zoom call. And we used to do it with the whole team on every call, and now we've sort of had to segment it just because the team's getting bigger. But we do once a week, an all-in call with the whole company where we go through key metrics that we're following. And it really covers the full spectrum from the origination team to the fulfillment or processing team through marketing, etc. And I think what it does, it really empowers and really keeps the entire company engaged,
Hmm.
and that the company takes ownership. So I think that's a phenomenal tool. And then as part of that, we read off our guiding principles, which really, what is it that defines us as an organization? And I think very often somebody in some HR tower will put together this is our mission, this is our values, and it gets stuck into a drawer somewhere and just dust it off if they want to show it to somebody. But we really try to live it. We will read out one of our core values every week and really try and embrace it and live it. And I think that is really just a phenomenal tool, because no one individual can build a great company.
Hmm.
It takes just a lot of really good people that are all playing to the same sheet of music and are all in sync and believe in the vision and believe in what you're doing. And I just feel blessed. I got a great team, just phenomenal people that make me look good every day.
Oh, that us as CEOs, that's the biggest challenge of it all is keeping it running. And all I have to do is look good out front in most cases.
Exactly.
Yeah, everything else
Exactly.
is running behind me. I don't have to worry about that piece of it. So fantastic.
Exactly.
What a great answer too. I usually you get some kind of tech answer or some low tech thing, but I
Yeah.
love it. That's a great tool. The company going. So last
Yeah.
question. What is your definition of freedom?
I think my definition of freedom is getting up in the morning and going to do something you really enjoy doing.
Mhm.
Just to have that purpose, to feel challenged, to feel excited. And excitement could come from dealing with issues and problems, and it doesn't all have to be unicorns and rainbows. But being excited is getting up and wanting to do something special and to change, to leave something behind that ultimately is going to make a difference. So freedom is waking up every day with a purpose and excitement for what's ahead. That to me, I consider freedom.
I love it. That's such a great answer too. So you've knocked them all the cover off the ball on all of them today.
I appreciate it.
Mitch, if somebody wants to find out more about ComLoan, where's the best place to go?
Well, our website, which is comloan.com, COM, two M's, LOAN.com.
Mhm.
Fiddle around on the site, and I think it's pretty self-explanatory. If you are in the process of looking for a commercial loan, just you can click on the button, get a quote. Something that's really exciting. We're just starting to open up our platform for loan originators. So we're bringing on loan originators. Up till now, it's been consumer direct.
Okay.
We're actually doing a launch in Dallas at the end of the month. So if you're a loan originator and you're looking at a life-changing event, a commercial loan originator, I must add, and you're really looking at really changing your life, we've got a phenomenal model for originators. Go to comloan.com and you can click on become a loan originator and you'll find out more about it.
I love it. Fantastic, my friend. Well, thank you for being on
All
the
right.
show and sharing your story today. It was wonderful. I wish you absolute success. I don't have to because you're already super successful with this, but it's exciting to hear how the product continues to develop and improve all along. So thank you for
Well,
sharing your time today and story.
well, appreciate it, Jeff, and we'll hopefully keep in touch.
Absolutely. And folks, certainly reach out to their company. If you're in the hunt for a commercial loan, they're the first the place you should go to. And always make sure that you subscribe to the channel, hit that little notification button because we put these things out on a very rapid basis. And you want to make sure you stay informed every time we're putting up a new show for you. So thanks a lot for joining us today. And we will see you back here the very next time.